Filing an extension on your taxes may seem easy, but there are penalties and interest that may be incurred if you don't file properly. So listen up. Number 1, failure to pay penalty. An extension for time to file is not an extension for time to pay. Therefore, if you file an extension, whatever remaining tax liability you may owe is still due on the filing due date, which is typically April 15th. So you need to meet with your tax professional in order to identify or approximate how much you expect to owe so that you pay that on the original due date, even though you may need some time to gather some additional pertinent information to properly file your taxes on time with your extension. Number 2, a failure to file an extension penalty. Yes, many people come into the office thinking that they don't have their proper documentation, they don't have the money to pay any potential tax liability, therefore, why do I even need to file an extension to begin with? Well, I'm here to tell you that if you don't file an extension for time to file, you could be subject to up to 25% penalty on the balance that you owe for not filing an extension on or before April 15th. So, how do you file for an extension? Well, the IRS allows you a 6-month extension if you file Form 4868 with your tax professional or on your own, which you can find on the irs.gov's website, or you can make an estimated tax payment, again with your tax professional, to project out what your potential tax liability is on or before April 15th and file that with an extension. So there's no reason that you shouldn't file an extension if you need a little additional time. Many people do it. You want to prepare your taxes properly, so no rush, but just make sure that you're filing the extension again before the due date, and that if you have any potential tax liability above and beyond what you've already made in estimated tax payments or payroll withholdings, that you make that payment in conjunction with the extension. Our third and final fee is our underpayment interest fee, which is 3% compounded daily on the balance you owe to the IRS. Again, I'm here to help you avoid unnecessary penalties and interest, so make sure that you're meeting with your tax professional to identify what your projected liability is on or before April 15th so that you can make that payment and avoid this 3% compounding interest until you have sufficient time to gather all of your information and file properly. To avoid an underpayment penalty, individuals must pay 100% of their prior year's tax liability or 90% of their current tax liability on or before April 15th. So, to recap, there are 3 main penalties you want to avoid and consider if you need to file an extension. Number 1, failure to pay on time. Number 2, failure to file an extension. And number 3, underpayment interest rates. I'm here to help you understand and navigate the IRS system, which can be complicated for most. I really hope you enjoyed today's video and learned a few topics and relevant information if you, at some point in time, need to file an extension. Please like, subscribe, and share this information with friends that you think could enjoy and get helpful tips on tax system navigation. Thank you again for tuning in, and we'll see you again soon.